Crypto Pirates Daily News, August 2, 2021. Latest news headlines. Charles Hoskinson of Cardano, ADA, warned that bad laws are having a negative impact on crypto. Cardano users will be able to utilize the network to deploy smart contracts. What exactly is Bitcoin halving and how does it work? But what if Amazon accepted Bitcoin as a payment method? August begins strongly for Bitcoin, but can the bulls reclaim $60,000 this month? Paid to play in the Metaverse, the crypto-powered gaming future. 3 altcoins to keep an eye on in August 2021. Charles Hoskinson of Cardano, ADA, warned that bad laws are having a negative impact on crypto. Charles Hoskinson noted, referencing Jake Chervinsky's tweet regarding the U.S. infrastructure bill, "Bad laws harm the economy. Therefore, I implore everyone to take this seriously. Crypto will suffer greatly as a result of this." The US would never turn down the opportunity to tax it. They will devise a means of communication. For those who are curious, why are they unable to stay out of the fray and leave the populace alone? Because money is their only concern. Time appears to be deteriorating, not improving. Some wondered if it would benefit HODL in cold storage till a Republican is elected president. Republicans, on the other hand, are unlikely to endorse crypto. The US desires tax money, which means that a de facto prohibition via mining reporting requirements will not occur. As is customary, they seek control. They're really chasing tracking and reporting to maximize their profit. US policymakers must be envious of China's progress of CBDC financial control over all of its population. The US appears to be rapidly approaching the level of China in terms of crypto. The government exists to fulfill the wishes of the people, not the reverse. Put an end to this. We seek crypto liberty. Governments, in theory, should act in the public interest. In practice, they represent only lobbyists and interest groups, predominantly companies and industries, whose major objective is to maintain the status quo. Other countries will emulate these broad-brush judgments and act similarly, as if the US is some sort of legislative gold standard. I hope that people stand up to this ambiguous nonsense for the sake of not only crypto in the United States, but for the sake of crypto globally. They desire the abolition of crypto and the people who use it. As a result, they may tax it and rest easier at night knowing they will receive what is owed. It's a matter of when those who created billions of dollars from thin air begin lobbying. A $1 trillion infrastructure bill, of which only $550 billion is spent on infrastructure. Political coders with a shadowy past. Greater an individual's economic freedom in a society, the higher the standard of living. Cryptocurrency is a significant step towards enhancing an individual's economic freedom. It is critical to maintain your composure and strength in the face of dread, uncertainty, and doubt right now. Rather than fleeing from the crypto sector, we need to accelerate, attract the masses, and begin cooperating. It's become a farce to continue pushing people to their limits, crushing them, and robbing them of their rights in the name of the greatest country, economy, and freedom of speech. This is not the way to achieve greatness. Another aspect on the tail is that now that the market is regulated, it will attract more people and money. Cardano users will be able to utilize the network to deploy smart contracts. Renewals of tokens began in May, and the team's work has continued uninterrupted since then. According to the token's inventor, the update will be done shortly, allowing interested users to take benefit of it. Numerous users who have long backed Cardano and its entire network have been anticipating this release. Cardano assures that a new update will be released shortly. Charles Hoskinson, Cardano founder, confirms that an update is currently being developed and will be released in the coming weeks. Hoskinson dispelled any questions about the cryptocurrency during a live session on YouTube, where he received positive feedback from viewers. The CEO even acknowledged that, because of the update's complexity, it was broken into two parts. According to Hoskinson, Cardano's initial update point will incorporate the fork's combinator event, which will boost the network's capabilities. The second element in the update will be a mechanism for running programs both inside and outside the blockchain network. The second section of the update discusses the building of decentralized applications that will be supported by ADA. Hoskinson's aptly titled hard fork will be available in September. Hoskinson believes, however, that by August, all parameters in the upgrade will be finalized. When the update is complete, users will have access to smart contracts on the Cardano network. According to Hoskinson, this change will pave the way for token-related crypto apps, such as Marlow. Additionally, he predicts a low adoption rate for the apps, which will be aided by the blockchain network. As a result of the recent ADA upgrade, network staking is increasing. In July, the ADA network's approximately 50,000 participating addresses were prioritized for September deployment. Cardano has reached 660,000 staking addresses, according to the reports. This sum exceeds $29 billion and accounts for around 70% of total token storage. ADA recently cooperated on a number of projects, one of which involves the identification and qualifying of students. The cryptocurrency has acquired user adoption, and with the update, its value may increase significantly. According to CoinMarketCap, the cryptocurrency is currently trading at $1.36, a 3.72% rise over the last 24 hours. On the CoinMarketCap platform, ADA is ranked number 5 in terms of market popularity and value. The Grayscale website recommended ADA as a decentralized investment vehicle. Due to its use of smart contracts, ADA may become a true competitor to Ethereum. What exactly is Bitcoin halving and how does it work? Every 4 years, obtaining a Bitcoin block reward becomes more difficult. Did you know that there will never be more than 21 million Bitcoins? Nor one more, not one less. This is why Bitcoin is becoming digital gold. Its supply is limited. We've already explored how miners on the blockchain are technically able to manufacture as many coins as they like, so how does Bitcoin keep its 21 million token hard cap? This is all due to a huge event known as Bitcoin halving, which occurs every 4 years. Bitcoin halving, also known as the halvening, is an event in which the supply of Bitcoin is slashed in half. This is a Bitcoin-specific procedure. Bitcoins are created by miners, who employ expensive technology, such as ASIC miners, to solve complex mathematical solutions that connect transaction blocks. Along with any transaction fees, each block of transactions processed by Bitcoin miners earns a block reward. As a result, when Bitcoin halvening occurs, the block reward earned by miners is halved. But why would you do that? This may be traced back to Bitcoin founder Satoshi Nakamoto's supply and demand theory-based concept on digital scarcity. Nakamoto believes that by making Bitcoin scarce, its value will rise. This approach of creating scarcity contrasts sharply with the way fiat currencies work, in which the federal government regulates inflation by fiscal and monetary policies, such as deciding on loan interest rates and how much money should be issued. Fiat currencies, such as the US dollar, are inflationary in the long run, but Bitcoin is the polar opposite, since it is guaranteed to be deflationary due to Bitcoin halving. How is Bitcoin divided in half? Bitcoin is halved every 210,000 blocks mined, which corresponds to roughly every 4 years. The timing of a halving is not decided by a central body, as this would violate the decentralized nature of blockchain technology. Bitcoin's protocol is already set up in such a way that all miners agree to abide by the regulations. The halving process will be repeated until each block reward approaches the smallest possible unit of Bitcoin, which is close to 0.00000001 BTC. Approximately 18.7 million Bitcoins have been created and are currently circulating on the cryptocurrency market, though many millions are irretrievably lost. This equates to roughly 89% of the total supply of Bitcoin. As a result, there isn't much left to be mined, which is all the more reason for Bitcoin halving to occur. It reduces the quantity of block rewards obtained by miners, slowing down the entire mining process. Is Bitcoin's halving a good thing or a bad thing? Bitcoin halving occurs every 4 years, like the Olympics, and is thus a much anticipated event. The Bitcoin block reward halving countdown website is counting down to the next halving. All previous Bitcoin halvings have been well received by both miners and Bitcoin investors, with the coin's value rising following each halving event. As a result, even if the supply of Bitcoins has been halved, miners are still incentivized to mine for more because the value of Bitcoin has increased. The halving has a disadvantage, as lucrative as it sounds. On the eve of halving events, miners make massive preparations. They invest a lot of money, tens of thousands of dollars for some, to get the most powerful mining hardware. This is due to the fact that mining for a Bitcoin grows more difficult and time-intensive with each halving, therefore miners must be equipped with the most powerful mining tools in order to continue their work. However, if block rewards are halved, some miners may decide to abandon mining altogether due to prohibitively high computational and power costs. In the Bitcoin white paper, for example, Nakamoto compared the mining process to gold mine. The ongoing creation of new coins is akin to gold miners devoting energy to introduce gold to circulation. In our situation, CPU time and electricity are consumed. As a result, as further Bitcoin halvings occur, mining BTC will grow increasingly difficult. Previous Bitcoin halving events. Every Bitcoin halving event is a huge deal and is thus carefully chronicled. In chronological order, here are the previous Bitcoin halving events that occurred in the community. 2009, this is Bitcoin's pre-halving era. Block rewards begin at 50 BTC. 2012, the first halving occurs at block number 210,000. Block rewards dropped to 25 BTC. Bitcoin's value increased from $12 to $1,207. 2016, the second halving occurs at block number 420,000. Block rewards dropped to 12.5 BTC. Bitcoin's value increased from $647 to $19,345. 2020, the third halving occurs at block number 630,000. Block rewards dropped to 6.25 BTC. Bitcoin's value increased from $8,821 to $63,558. Of course, other market developments at the time had an impact on Bitcoin's price. However, Bitcoin halving has undoubtedly had a big part in Bitcoin's parabolic price gains and is to blame for a bullish crypto market. At this rate, the next halving will occur in 2024, when the number of blocks hits roughly 840,000. By 2032, more than 99% of Bitcoins will have been mined, and block rewards will have fallen to 0.78125 BTC. The final halving will occur in the year 2140, when no new Bitcoins may be mined and miners will only be rewarded with transaction fees. Transaction fees presently account for less than 10% of a miner's block reward income, but as we approach the year 2140, the proportion of transaction fees awarded to miners is projected to increase. Nobody knows what will happen when all bitcoins have been discovered, although it is feasible that Bitcoin's blockchain protocol will have undergone substantial modifications by then, resulting in the introduction of a new method of mining for Bitcoin. Searching for digital gold. The halving of Bitcoin is a huge event that creates a lot of buzz in the cryptocurrency community. Bitcoin's value skyrockets following each halving, creating a win-win situation for all parties concerned. The occurrence of such an event also demonstrates that using blockchain technology to create a scarce commodity in the digital world is viable, which has the potential to revolutionize the way we perceive and utilize money in the actual world. But what if Amazon accepted Bitcoin as a payment method? For cryptocurrencies, 2021 has been a wild year. They've plummeted from all-time highs to abysmal lows. In April, Bitcoin reached a new high due to the pandemic's popularity, which, combined with strong backing from Elon Musk, caused the cryptocurrency's value to skyrocket to well above $63,000. However, due to environmental concerns and a lack of faith, the value of Bitcoin has subsequently dropped little under $40,000, with lows in July falling as low as $29,000. The cryptocurrency market is unpredictable and ever-changing, with even the smallest rumor causing a massive shift, for better or ill. This is exactly what happened after Amazon allegedly stated that they would start accepting Bitcoin. When I looked at Amazon's job listing site, I saw 74 listings for jobs using the phrase blockchain, the backbone of cryptocurrencies, many of which were posted earlier this year. While the jobs were not necessarily tied to blockchain development, but rather sought some type of experience with the technology, many investors interpreted this as a hint to put their money back into crypto as it was about to become a viable way of payment for ordinary products. The trend of cryptocurrency becoming more than a niche investment has been slowly expanding over the years, particularly around 2020 and 2021. Some businesses are also utilizing it as a reward scheme. Unify Money debuted the Unify Premier credit card in April, giving consumers the option to redeem their rewards as Bitcoin, gold, or equity as they spend. Companies such as Overstock have also demonstrated the viability of crypto as a payment mechanism, having accepted the digital currency since 2014 and continuing to receive investment, demonstrating trust in the plan, despite its current dip. Following the rumors, Bitcoin increased by more than 14%, nearly hitting $40,000 per unit before settling near $37,000. There is also suspicion that the price increase was caused by traders buying up Bitcoin to fill bets they were short on, having bet its value would fall even further, though the consensus is that it was caused by Amazon. With Bitcoin's recent rally, more than $1 billion in short crypto positions have been liquidated, bringing Bitcoin's dominance closer to 50%, albeit it is still down approximately 33% from its peak of 73.68% in early January. Amazon's stance on cryptocurrency, supportive or anti? Though Amazon denied that the digital currency will be implemented immediately, a spokeswoman for the retail giant stated, "Notwithstanding our interest in the industry, the conjecture that has ensued surrounding our precise plans for cryptocurrencies is not factual. We will continue to investigate how this can affect Amazon customers." However, the question remains, how would the market respond if a retail behemoth like Amazon declared that they would take cryptocurrency as payment? The following question was posed to industry professionals by the FinTech Times. If Amazon decides to start taking Bitcoin, this will result in a short-term surge in the price of Bitcoin, stated Max Sapilov, CTO and co-founder of CoinLoan. Furthermore, if a major behemoth like Amazon accepts cryptocurrencies as a payment mechanism, it will be viewed as a favorable signal for the community, positively impacting the entire crypto market and attracting other companies to do the same. We are now seeing major firms begin to operate in cryptocurrency and accept digital currencies as payment, and for some, such as Square and Robinhood, it has become their primary source of revenue. I am convinced that Amazon will provide cryptocurrency as a payment mechanism for their services in the near future. Cryptocurrencies are growing more widespread, and it is hard to ignore them. Amazon will need to hire some pretty smart traders to hedge the currency risk of Bitcoin, said Carol Alexander, a finance professor at the University of Sussex Business School. Of course, they already have a large staff in place to hedge fiat currency risks, but Bitcoin derivatives markets are not the same as fiat forex forwards markets. The forex market revolves on London's regulated 4 p.m. fix, and volatility ranges between 15% and 25%, depending on the currency. However, the primary Bitcoin markets are unregulated and highly fragmented, and their derivatives products are enormously complex, not to mention that their volatility frequently reaches 100%. Even skilled crypto traders who have been in the industry for years do not completely comprehend the risks they are committing. Amazon will need to begin hiring immediately from a very tiny pool of traders who completely understand how to deal in these markets. Amber Gardner, co-founder of Alliance Block, took a broader approach and emphasized Bitcoin adoption as a payment method versus an investment, saying, "We need to be able to discern between crypto used as payment and crypto used as an investment." PayPal's recent foray into cryptocurrencies is the finest illustration. To be clear, PayPal users cannot make payments using cryptocurrency. PayPal, on the other hand, can be utilized to gain access to cryptocurrency as an investment vehicle. This is a significant point of differentiation. Typically, investments are kept. The greater the increase in investment flows, the greater the growth in demand, which is usually positive for pricing. This is a new revenue source for PayPal that has definitely paid off, but it is not reflected in total payment volume, confirming our belief that Bitcoin is utilized as an investment rather than a payment. However, how users interact with Amazon varies greatly. Amazon is a marketplace, and the sole use for cryptocurrency would be for payment, not investment. Running some quick numbers, if we assume that 10% of Amazon's total daily e-commerce sales will be settled in crypto, which is still an extremely bullish scenario in my opinion, it would represent slightly more than 0.10% daily on-chain transaction volumes and approximately 0.15% total spent transaction output if we look at the median for the year ending April. And, in our opinion, this should not have a significant impact on the network's fundamentals. However, the velocity of Bitcoin in comparison to conventional money is far lower, making it more analogous to an investment medium than a payment medium. In fact, 45% of entire Bitcoin circulating supply is hodling and has not moved in the last 2 years. Let's see if using Bitcoin as a payment method makes sense. It makes little sense to use Bitcoin to pay for everyday products and services if you expect Bitcoin prices to rise in the future. August begins strongly for Bitcoin, but can the bulls reclaim $60,000 this month? Since November 2020, when the bulls signaling their arrival, this year has been Bitcoin's greatest year. Analysts, investors, and traders were quite confident in the bull's ability to sustain newly achieved price levels in the early part of this year, and they were right for the first quarter of the year until they weren't. The bear market that reduced Bitcoin's price is still visible on the altcoin market, and Bitcoin has yet to make the leap that analysts believe will propel the world's most valuable asset to $100,000 for the first time since its inception. August is a key month for Bitcoin this year for the following reasons. August, on the other hand, appears to be riding a different wave, one that is bullish. According to the report, This could be the month when Bitcoin finally raises the second leg and extends the bull run. According to technical analysis, Bitcoin has earned a daily profit of about 24% after successfully maintaining the $41,000 price level. As expected, the fear and greed signal has turned bullish for the first time in a long time, implying that the Bitcoin market's prognosis is generally positive for continued upward momentum. However, what are the true motivators of these perspectives? Interest and accumulation in institutional investment soars. Institutions haven't stopped flooding into the market since they entered. While several institutions abstained from purchasing additional Bitcoins during the bad market, they have since returned, with huge Bitcoin acquisitions in the last month. While this will not alone be sufficient to drive Bitcoin's price upward, it is critical for the market to restore its footing. On the other hand, on-chain data indicates that accumulation from miners and long-term whales has occurred since May. As a result, it's safe to assume that the fundamental state of the Bitcoin market is quite positive at the moment, and that $60,000 may not be an issue for Bitcoin at this point. Meanwhile, it is critical to remember that little sell-offs continue to occur, as Lex Moskovsky stated. As evidenced by LTH-SOPR reaching this year's low for 2 straight days, some long-term Bitcoin holders are selling into this rally with little reward. This is one of the reasons we've maintained our 41K position. Skeptics remain negative as well, meaning that more than Bitcoin maintaining $40,000 will be required to convince the market that the bulls have actually returned. Crypto Whale, a cryptocurrency expert and skeptic, stated as follows. What makes this bull trap so astonishing is that 99% of Bitcoin traders believe we are still in a bull market. These phony-out rallies that everyone goes insane over are extremely prevalent in bear markets. During the 2018 Bitcoin bubble, we witnessed them virtually every month. Paid to play in the Metaverse, the crypto-powered gaming future. The history of gaming is told through advances, from Pong to the PlayStation 5. Sure, graphical prowess and raw horsepower impress us all, but beneath the sparkling sheen of ray tracing at 4K/120 FPS, there is always something more vital to any game: how it plays. True innovation occurs when mechanics or gaming scenarios change and inspire people's perceptions of game design. The free system pack in Astro's Playroom, a light platformer starring a charming little robot, dominated the news cycle with the original introduction of the PlayStation 5. Why was this piece of software hailed as the first true next-gen experience by many in the gaming community? As a result of a new controller. Yes, Sony's DualSense controller was the key piece of hardware that dropped people's jaws at the start of this newest console generation, since it provided features that allowed players to become more immersed in the game world in novel ways. Whether it's the advent of the analog stick, disc-based media, or even touchscreens, cutting-edge technology that affects how we engage with the medium is what propels the industry forwards in leaps and bounds. All of this begs the question, what happens next? What is the next significant step? What if we altered the game's core concept? What if we all went into the Metaverse at the same time? Introducing the Metaverse. The Metaverse is a persistent, fully realized game universe. Part virtual reality, part augmented reality, part social network, it is almost limitless and includes full-fledged economies, employment prospects, and, yep, you got it, unique game scenarios not found anywhere else. The Metaverse is one of the most significant technological developments in the game industry in decades, and it is growing by the day. Even in this day and age of asynchronous multiplayer and always online morphs, the Metaverse is doing something different. Not only is the game environment persistent, but Metaverse gamers can perform things that no other video game allows. It connects physical commerce and communication to virtual interfaces for such systems. In the metaverse, what exactly can you do? You may buy land, establish a community, start a business, buy and sell art, and even generate funds for real-world organizations. The metaverse's real estate market is thriving, with pieces of virtual land selling for hundreds of thousands of dollars on a monthly basis. On that land, houses, cities, towns, and villages are being developed, and an entirely new world is being created. People can make a living in that world. For example, one enterprising player established a tour company within the game, transporting visitors about to show them the attractions. This virtual entrepreneur charges a fee for this service and earns money. Indeed, in many metaverse games, players gain money simply by playing. There are numerous additional earning opportunities and commercial endeavors that gamers are engaged in, and we've only scratched the surface of video game innovation and what the desire to earn money while playing games will undoubtedly bring about. Even those who lack an entrepreneurial mentality, however, can participate in this market. In the metaverse, art collectors and lovers have built a whole new art market. Non-fungible tokens are something you've probably heard of, NFTs. One was notably sold for $69 million earlier this year by digital artist Beeple. NFTs are essentially a new method of authenticating and proving ownership of digital data. At the moment, most people in the metaverse use NFTs for adornment, but the market for buying, selling, and trading these NFTs is vast and complex. People who purchase an NFT can keep it as a typical collectible, let it appreciate in value over time, or resell it. Furthermore, philanthropists are using the metaverse to raise funds for real-world charity. The majority of games in the metaverse have their own unique currency. Decentraland, a popular metaverse game, makes use of mana. As worldwide cryptocurrencies, these in-game currencies might have real-world worth. In the future, new technology will be leveraged. The technology that underpins all cryptocurrencies is known as blockchain, and it is a cryptographic system that enables trusted exchanges without the use of a middleman. That is, no bank, no developer, and no credit card business profit from your participation in the game economy. The combination of blockchain technology with gaming is the secret sauce that is reinventing what is possible in our virtual worlds and spawning a new sector within an industry. Consider the demise of costly, DRM-enhanced microtransactions and downloadable content. In today's gaming economy, purchasing in-game products and owning them absolutely as living, liquid assets is revolutionary. Users are in power in the metaverse. They create the world, interact with it in any ways they want, engage other players in whatever ways they want, and may manage the entire economic system of their perfectly constructed part of the digital globe. The metaverse delivers more immersion, complexity, and granular control over practically every aspect of the gaming environment and user experiences, and this is only the beginning. We're in on the ground floor, and the metaverse's future may include anything: persistent connections, VR integration, and even augmented reality integration, which merges the real world around us with the virtual world. The metaverse has limitless potential and will very certainly continue to alter the gaming industry's destiny in entirely new directions. Three altcoins to keep an eye on in August 2021. With so many fascinating cryptocurrency projects available, it's easy to limit one's attention to new or undiscovered coins. But don't forget about the old standbys. And because August is a critical month for the crypto giant Ethereum, ETH, it's at the top of my list of coins to watch this month. In terms of larger coins, August could be a good month to take stock and ensure your crypto portfolio is well balanced. Ideally, your crypto investments should account for 5% to 10% of your entire investments. Aim to hold the majority of your crypto assets, 60% or more, in safer, more established coins like Bitcoin, BTC, Ethereum, and possibly Cardano, ADA. If you want to diversify and experiment with smaller coins, you may get larger profits, but you'll also be taking on more risk. Cryptocurrency is already hazardous, and many currencies will fail, so you should examine your options carefully. Here are 3 altcoins to keep an eye on in August. 1. Ethereum's hard fork. On August 4th, Ethereum will conduct a long-awaited and somewhat contentious hard fork known as the London Upgrade. A hard fork is a significant modification to the programming of a network that renders prior versions obsolete. The London update should not be confused with the larger ETH2 upgrade, which is being implemented in stages and attempts to address some of the coin's scalability and sustainability issues. Vitalik Buterin, co-founder and developer of Ethereum, recently stated that the full ETH2 rollout may not be completed until 2022. Regardless, the hard fork is significant. According to CoinDesk, the adjustments are intended to lower the amount of Ethereum on the market, enhance transaction times, and stabilize costs. Transaction prices on Ethereum vary depending on how busy the network is, and excessive fees have pushed some developers to seek alternative cryptocurrencies. There are, nevertheless, some dangers. The adjustments will cut the fees that miners earn, perhaps discouraging Ethereum miners. As a result, transaction delays may lengthen and security risks may arise. Furthermore, any large upgrade carries the possibility of technical faults and problems. If there are any problems, it might frighten the entire altcoin market, especially given the fact that so many coins are built on Ethereum's foundation. With so much at risk, Ethereum will be the center of attention in August. 2. Algorand's ALGO. Knowing that Ethereum will not be fully upgraded to ETH2 until at least next year draws attention to alternative programmable blockchains. There are several intriguing cryptocurrencies in this arena, but one that we haven't discussed before is Algorand. It is faster, less expensive, and less harmful to the environment than Ethereum. The average transaction fee is 1/10 of a penny. According to its website, Algorand can currently process 1,000 transactions per second, TPS, and plans to rise to 46,000 by the end of the year. To put things into perspective, Ethereum now processes roughly 15 TPS and may be able to reach 100,000 TPS when ETH2 is released. Algorand, created by MIT professor and Turing Award winner Silvio Micoli, shares numerous characteristics with Cardano. Its team consists of academics and business experts who have created their own proof-of-stake blockchain. Proof-of-stake is a more ecologically friendly method of network security, and it allows you to receive staking rewards as an investor. Unlike Cardano, Algorand, on the other hand, already has its smart contract functionality operational. Cardano plans to introduce these in September. Smart contracts are little pieces of code that reside on the blockchain and allow it to be programmed. It means that developers can create new applications and cryptocurrencies. 3. Engine, ENJ. With all of the recent enthusiasm surrounding Axie Infinity, AXS, and its massive price increases, it appears that now is a good time to pay attention to other gaming and non-fungible token, NFT, cryptos. NFTs are a form of digital collectible that Engine users can create, own, and play with. Engine, for example, collaborated with Microsoft and the famous video game Minecraft earlier this year to build unique NFT heroes that players could utilize in the game. Engine's devotion to sustainability is another intriguing element. It has already ratified the Crypto Climate Accord and intends to launch carbon-neutral NFTs by 2030. It became the first NFT firm to join the United Nations Global Compact, the world's largest corporate sustainability effort, in July. The environmental impact of Bitcoin remains a concern for many investors and NFT producers, thus eco-friendly cryptos are worth investigating. Gaming is a promising blockchain business, especially given the possibility of gamers owning NFTs as in-game assets. Previously, if a player purchased something in a game, it belonged just to them in the game. The allure of NFTs is that gamers own them and can trade them in the real world as well. Gaming, on the other hand, can be unpredictable and vulnerable to trends. And blockchain's relatively modest transaction speed has so far limited its ability to host complicated games. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.